peoples, let's jump in here for Coin and Coney on Friday. How'd they do? Well, a little bit. We moved up 4 points. The issue is we're getting close on this 200 here, right? So let me get you the trades. We didn't have anybody buying into the fund, and there was one prior to today. This 950 hadn't been closed out. They closed all the other ones yesterday and wrote all of these. Well, they wrote this one on 8/7. They wrote three more yesterday, and then the final one here, they closed out at 22 cents, which didn't make a lot of sense. They must have done it earlier in the day because it was a 205 and we were only 196. So again, not always the best. I say not the best execution, but it depends on what time of the day. But it just seems awful high. I mean, not they sold the thing for $4 and something, but I really don't understand 22 cents, but if that's the worst case, that's minor. And then they sold a new 202.50 for $4.10, same quantity, out to 816. But the problem we have is we're at 196, and so this is all of ours. These are all closed. So in general, this was a small quantity, but 22 cents is kind of high. I mean, we wrote it for 334. We had to pay 20,000, so we got 313. I mean, it's still positive. It's still money. So we sold it for 352. That's fine. I can live with that. But what is a little nerve wracking here is most of this is close. I mean, we're 194, 196, so 200 is very close, right? I'll show you on the weeklies what the percentage is. 202 is a little better. And so we got a big one at 202.50 and a big one at 207.50. But you have five more. You have all of next week trading. So on one hand, we want coin to move up, but if it moves up too aggressively to wipe out our debt, right? We have 210 synthetic. So as we get to 210, we turn 42 million the loss into a slight gain. But we really can't afford to go to 210 because 210 will kill us on these 200s, hurt us on the 207s, and kill us on the 202s. So it just, it's when they write close like that. Now, it's the yin and yang is, let's say they end up at 199 next Friday. That's great. We win all our weeklies, and we have all the way till September 20th, but we do want to get into the 200s and get up to 210 and really turn this fund around and start making money on both the synthetics and the weeklies. So that can be done. They just have to play it right. All right, let's go look at the weeklies. So here we are with what I was talking about, 1.89% for a whole week. The only way we win that is we move up early in the week or something, 203, 204, and then slide down later in the week and end up at 200 or less. I mean, but the synthetic only sees the 200 at the end, right? Because the synthetic doesn't take the booked profits until you sell or roll, and there's no reason right now to do that. So that's why I was explaining. I had a great question in my comments one time. They said, hey, I understand, what happens if we run past the weeklies? Do we start losing money or do we still make money? And I said, well, for the distance to go out on the weeklies, I'm educating now. So say right now we're at 196. So all the way up to 200, we make money on that synthetic. And we still make money on these guys up to their respective quote capping. The capping starts at 202.50 and 207.50. So if this 93 on our contracts goes to 202.50, then we buy everything back for 3 or 4 or 5 cents and we keep all that money they paid us. The minute we go over 250, each dollar starts then giving all the money back, plus we have to start paying. So if we go to 220, I'll make up something. Then we got $20 on this guy that not only do we give back all the money they paid us, then we give 20 times 15.8. Well, we only sold this for $3 or $4. So we lose the $3 or $4, and then we have a $20 gain times all those contracts. So essentially, the synthetic is over here with this many contracts also, and it's fully long. So we can wipe everything out that we made except for a small bit on the synthetic. So all that big rise is useless, right? So that's why, and it's a yin and yang thing. I mean, I gave a scenario where, okay, we get capped on the weekly. And I go, okay, but it didn't kill us completely because the synthetic went way up. So that synthetic at 220 is now making money. All of these were getting killed. But then let's say it slides back down over the next 4 or 5 days. Remember, that's not a booked profit in the synthetic. That's just a paper gain. It's like you buying a stock at $10, it goes up to 16 and you sit around for a couple of weeks going, yeah, I'm making money. All of a sudden the market comes down and you bought it at 10, 16 and the market goes back down to 9. You never made that money. You never booked that profit. You just had a paper gain, right? So that's why the contracts on I shouldn't say why, but the contracts on the synthetic are 4 weeks, 8 weeks out when they write them. And then so they only take them off when they roll them into another strike price or they need the money to go buy the big loss on the weekly. But in a perfect world, they're writing these weeklies out at 5, 8, 10%, and the stock is going up 3, 4, 5. They're keeping all of that weekly capital, and the synthetic is rising a little bit. They're winning on both. That's the perfect scenario. The worst scenario is you blow by, you're capped, you go by these weeklies, you have a big loss, but hey, my synthetic went up. And then you go along for a while and it starts going back down. Well, then if you've written new weekly calls, you win your weeklies. But man, all that offsetting those big losses was the paper value of the synthetic. Now when it goes down, it's losing its cash value. So these income funds can be really good at times, but they also can be nasty, and you can lose both going down and going up. Now, typically going down, you're always collecting your weekly calls, so you're making a little bit of income, but you're going down roughly at 85, 90% of what the underlying's going down. You're just getting some weekly income. And if you turn up and you just roar up really high fast, then you're getting capped on your weeklies. You're hardly making any money. So it's one of those things that weeklies can be a godsend. Sorry. Yeah, really, it's the weeklies that hurt us. Because if all we did was go a synthetic long stock and not write the weeklies, we really wouldn't be able to adequately pay out much yield or dividend. But if that stock takes off and starts running, we're going to make a bunch of money. It's just like owning the stock. But we with Yieldmax are choosing to get the income side. But, and I already said to people that say, well, you have 100% of the downside and only 15 of the upside. Well, we may only have 5% of the upside in a given week, but every week resets, right? It's just when it runs by 30% by the 5% weekly out, how far they wrote it, that 25% loss takes away from the 25% gain over in the synthetic. So it's like neutral. You didn't really gain, you didn't really lose, but you gained a little bit of income for that first 5% you went up. And so that's how these things work. It's kind of complicated. I mean, you have to look at every situation and there's all these little nuances. So, on one hand, they're great. And on the other hand, you got to really understand them. And it changes from week to week. So that's why I try and educate as much as I can on this. And frankly, when I find I'm really bullish on something, more and more, I'm owning some underlying, I'm owning a 2X. I'm doing some of my own covered calls in addition to just owning the Yieldmax fund to get some income. Um, okay, guys, so let's get into, I think I showed you, oh yeah, I showed you the weekly. Let's go over and look at holding. So our synthetic is doing better. Why? Because we're moving up. It doesn't take a lot. It's a 210 and we went from 192 to 196 and that brought us down from a 54 million loss to a 42 million loss. So you can imagine here as we get up to 210, we're going to be, this thing's going to be even, very likely, both if we go to 210. But we can't do it this next week because we'll lose our shirts over here because they didn't write very far out. And, you know, all you have to do is go look here, right? We're 1.89. The very best one is 5.71. But that's 5 trading days in BTC. Again, anything could happen. This thing could go to 199 and stay there all week, and we win all the weeklies. And we gain a little bit on the synthetic. That 42 might become like 38, and we captured all of our weekly. So that's what I mean by little steady gains are really way better than big fast gains. Um, so that's the scenario. Let's continue on holding. So that got better, but look over here. Because we keep moving up and that 200, look at that. We sold it for 5, we'd have to buy it at 9. Now, in fairness, that's the IV, the high premiums, because we're not at 200, we're at 196, but this option knows, hey, that's 5 more trading days. This is all time premium because we're $4 under that strike price. So they're saying 5 trading days, man, that's worth $5.9. If all we did was just move flat up and down and stayed at 196 and move, then this is 0, or they have to buy it back a penny or two. So we go from, in theory, a $9.3 million loss to having get to keep our 5.8 million. Same thing over here, 202, right? Well, we're not quite as far down. We're only 4.6 on 3.6. And finally, we go over here. It's far enough out at 207.50 that we've actually captured 10%. We wrote it for around 350, or I think 361. So there we are with, we could buy it back for 2.9. Now, granted, as we move over and don't go anywhere near 207 and 202, those guys are going to be just fine. But this guy is almost 50%. He's about 42% of the overall, and he's real close. Okay, so where did we finish? We finished at 1537, peoples, and fair value is 1534. So I like the upward movement. I just don't like the close in options that they wrote, especially that 200. So this is what we look like, right? We're moving in the right direction on the synthetic, and this is no longer any 250s, right? This is only the 210 because we went ahead and took the loss. So let's go over a payments. And in general, this is looking better as a month. The reason we have this big loss over here is all because we had to close out all those 250 losses. This is all of those calls and just the latest one today that, you know, we're counting that as money, right? Well, the 200 strike is vulnerable. But that's what I mean by yin and yang. So we show our 42 million loss. Well, how much is that? Well, it's a little more than a dollar. It'd probably be a dollar two, dollar one. Okay. Well, actually, that's something else there. But that's what it is. You can see that 42 million and 41 in shares is going to be a dollar three, dollar four. But you'd have to add that in theory if we stay here. So right now we've got a dollar 41. It's not a loss, because if it's a loss, that means we get paid. But technically, the positive numbers are losses. So we'd have 141 here. But now we have a chance to go up on this. We just can't do it in a single week. Um, but overall, I like it. I don't like if this is 80 million. You have those kind of months where you just get killed, right? Um, and then you have months like in February where you had 146 million gain, right? So they earned $3.88 that month. So it is a yin and yang situation. As I've said many times, it's like threading a needle. You want it to go a certain way. And it's all because of these income funds. I know they're looking at option spreads for some future ways to generate money. Um, and with the spread, your loss is limited to how much you put in the option. I could get into explaining spreads, but you can't get run by a spread. You can only lose the income you invested in the spread, but your gain is limited. Whereas if we write this 12.6 all next week, and it ends up below 200 and thus below 202.50 and 207.50, we capture the whole 12.6 million. Okay, guys, that's what I got for you. I mean, I feel better about what Coin is doing. A little frustrated with that in tight options, but I do realize they're trying to get as much income as they can. But there's that fine line. Don't write it so close. At the end of the day, it's BTC. Maybe BTC's run as far as it's going to run for this next, week. I don't know. So can I say they just absolutely blew it by writing that 200? The proof will be in the pudding and what happens. I can't say that because they don't know and I don't know what it's going to do. But I call it risk management. Do you want to risk that you're that close to it? Or would you rather get a little less income and go a little further out? Well, I know what my answer would be. Okay, guys, that's what I got for you. Have a good one. I got more videos to do. Have a great weekend. Bye for now. Again, not financial advice. I'm not a financial advisor. Bye for now.